Welcome back to episode 32 of the Eagle's Nest. I'm very excited about today's episode. I'm joined today with Kevne Sharpe and Marilyn Weaver. And on today's podcast, we're going to be talking about mindful wealth, creating purpose and meaning behind your wealth, and how the impact of a financial advisor can help you be a little bit more mindful about your wealth and about your financial situation. The definition of wealth has evolved. Before, it was about adding more zeros to your bank account and accumulating more things. Fortunately, things have changed. Today, wealth is about creating deeper meaning and developing healthier financial habits. And if you agree that the definition of wealth has evolved, then so too must the role of the wealth advisor. So today, I want to open it up with Kevne and Marilyn and talk about their experiences in the financial service industry and how things have evolved, or maybe not evolved, and how that has impacted their clients and creating meaning in their lives, as well as developing this idea of mindfulness as it relates to financial planning. The idea of mindfulness is not new. This is a Buddhist idea that goes back like 2,600 years or something like that. But all of a sudden, it kind of becomes a really popular thing in today's world where mindfulness is kind of infiltrating every space in our life. We're talking about mindfulness training from the standpoint of fitness, health, nutrition. There's a number of things, but it's also infiltrating the space of financial services. And being more mindful about your finances can really help and develop better habits, better financial outcomes. So Marilyn, what do you think about the history of financial services? And I guess, do you think that financial advice has evolved since you started in the business?
Oh, definitely. When I started, then I was with E.F. Hutton, and you only had access to financial information through your broker. And they called them brokers because what does a broker do? They buy and sell things. So a broker was someone that had access to a quotron back in the old days. Before
A quotron?
A quotron.
That's before my time. So when was this, if you don't mind me asking about that?
I started in 1984.
Okay.
And I mean, obviously the quotron had been around at that point a while. But, I mean, go back and you had the ticker tape. Where people would come and have the ticker tape. But the quotron was the first time, that was the predecessor to the personal computer.
Okay.
So someone could call in, they could get a quote, they could buy and they could sell stocks and bonds, mutual funds, limited partnerships. But no one ever called in and said, can I have financial planning? That wasn't something somebody called. They might call in and say, I need help looking at my financial situation. But I wouldn't say that people were calling in asking for financial planning.
So it went from this idea of brokering a transaction. So you had the information and the client was looking for it. Now it sounds like you're saying it's evolved to be something more of like, I would say maybe problem solving versus product based. Would that be fair?
That'd be really fair. And it started to evolve. Late in the 80s, they started to use a more institutional model, which means that people came in for financial consulting.
Okay.
So financial consulting was looking at solving a problem.
Right.
So that started around the 87, 88, and has evolved since then.
And would you say, in your eyes, in your estimation, this evolution of the financial services industry, from your experience, has been a positive thing, negative thing? How would you describe it?
I think it's positive.
Yeah.
I think people like to think that there's more to life than just a product, just buying and selling something.
Right.
And I don't know about anybody, when you ask them to tell you what their story is, they don't start off by saying, I want to buy something. What they start off is to say, I need to educate my children. I need to pass assets on when I die. Right. So those are problems, and they're looking for strategies to solve those problems.
So switching gears over to Kevne, I guess I'll ask you the same question. Do you think the role of the financial advisor has evolved, or maybe financial advice has evolved since you started in the business?
I do. I actually started just 2 years later than Marilyn, in '86. And when I entered the industry, I had to make a choice.
Yeah.
I was either going to be working on the insurance side of the industry, or I was going to be a stockbroker, or there was this new concept called financial planning.
Okay.
And it was indeed new, as Marilyn just described. It was the idea of understanding a bigger picture of somebody's situation and digging deeper than just a product positioning sort of conversation, and really identifying goals and helping develop the steps necessary to reach those financial goals.
Okay.
That was new in the mid 80s. And over time, we have seen these ends of the spectrum, the insurance side, the brokerage side, the financial planning side, all I think kind of starting to merge together.
Yeah.
I believe that the population now wants to have conversations with somebody who can help them in, as Marilyn said, understand what their issues and problems and concerns are,
Yeah.
and help them solve those, as opposed to just speaking with somebody about a particular investment or insurance vehicle.
Yeah, I mean, that brings up so many things that are kind of running through my head. And one is this idea of like anxiety that we have around money and finances. And like, is a product going to like solve that anxiety? And I guess the answer is no. And we just have such bad education around finances and money in the United States anyway. Like, that's not a basic course that many kids are taking. And so there's just this blockade of knowledge that it feels like we are in engagement with our clients on that side of things. So you're talking about kind of the evolution of there was these three prongs, if you will. So there was you had the insurance side. So you had the annuities, like life insurance, things like that. And then you had the traditional stock and bond broker, right? And then you had this third leg, which was like the financial planner. In your experience in those early days, with the idea of mindfulness, I get kind of joked at and, maybe bullied or whatever you want to say, or talked, with people that have been in the industry for a long time, and they say, oh, all this touchy-feely stuff, I'm not comfortable with that. I don't like that. So with your experience, both of you being CFPs and myself as well, but you've been in the industry for quite a bit longer than me, was this idea of financial planning kind of pushed aside at first, or how did that come to be basically mainstream as it is today?
I think it evolved. I think that it may have started at an institutional level. It may have started with companies, corporations wanting retirement planning for some of their executives, and with that they needed to deliver a plan. And so they went to some of the major brokerage houses and they came up with retirement planning areas.
Yeah.
And then they started to realize, oh gosh, when people look at the whole picture, we might be able to do more business with them.
Yeah.
So I think that, and guess what? They like us better because we've actually helped them, and they come back and ask us for more advice.
Yeah.
And that's what we're looking for.
Mm-hmm. The firm that I joined very early on was actually an early adopter of this concept called financial planning. And so that is the only role I have known for a very long time. And it has always been, even then, about a deeper relationship.
Yeah.
Beyond just a simple stock or bond or insurance transaction.
Right.
And I believe that as word has spread in our population, more people want that than just a transaction.
Yeah.
And also the transaction sort of environment has become commoditized, where I can, or anybody, not just me as a licensed broker, anybody can go online and make their own trades happen. They needed help to do that before. They needed somebody who was licensed to do so. Now, not so much. The people, I think, are finding the value of really having a relationship where somebody is helping them understand that their goals can be met in a very comprehensive, holistic way.
Yeah. Yeah, it seems like we've, kind of gotten rid of this transaction, which is, again, where we're focused on that insurance broker or the stock and bond broker. And now we've brought, actually, those are kind of dying areas. And now we're actually not introducing, but the proliferation of the financial planner is much more widely accepted and frankly needed by our clients. But what's interesting about what you were saying is that we've democratized information. Like, the internet is this like wonderful thing of information, but now all of a sudden we don't hold the keys to the castle. We are now with our clients, and they in some cases have more information than we do because they're searching for it. And so, but one thing that they can't avoid is this idea of fear and greed or some of the emotions, and we'll get to that here in a moment. But I guess I'll ask you, is there a moment in time, because I think history matters when it comes to this conversation about financial planning and mindful wealth, was there a specific moment in time that maybe it was an event, maybe it was an interaction with a client, that you recognized that things have changed and we're not going back in time? Marilyn?
Probably the first time was right after the crash in 1987. So
Okay.
after Black Friday, people were looking for advice.
Yeah.
And they weren't getting it. And so they didn't know. They wanted to look at their whole picture
Right.
to find out what that did to them. And I think that's the beginning, is seeking knowledge.
Yeah.
And once they're seeking knowledge, then where are they going to go? Because they didn't have access to the internet at that point.
Yeah.
So now they can go and they can look things up, but they got so much information.
Yeah.
How did they get through it? So I think that was the beginning, at least in my career.
Yeah. And then it seems like in the early 90s, you then went and got your CFP, because it sounded like you were like, all right, I gotta differentiate myself. I'm not necessarily the broker that once existed. Tell me about your experience going into being a CFP.
So in that process, then what I realized is I needed a larger body of knowledge.
Yeah.
To be able to deal with to help my clients.
Yeah.
And I wanted a certification that said I have studied all the areas
Right.
of financial planning and to be able to help my client.
That's awesome.
And a lot of people don't know that they had the College of Financial Planning. It was right here in Denver, Colorado.
Still is.
Yeah.
That's where I did all my studying, just down the street.
Yeah. So we had a huge body of knowledge right here in town that we could reach out to.
Right.
So I think that was my beginning. Is I wanted more information. I have a PhD. So
Yeah.
having a higher education, you realize having more education is often a good thing.
Right.
And I wanted very specific education on financial planning.
And then it's also the application of that information.
Sure.
And how because if you have this great information and you don't really apply it to your clients, like, it kind of doesn't really serve them, right?
Correct. And I was surprised that, talking about mindfulness, is that when clients would come in, one of the things to be able to get them into a state of mindfulness is to talk about what that was. And so many people had achieved mindfulness, but it was walking through the woods. It was
Right.
as an athlete.
Right,
They talk
right.
about that moment of focus. And to get them to take that concept and put it into looking at their finances
Yeah.
was huge.
Oh, that's amazing. So, Kevne, I'll ask you a kind of similar question about like a moment in time for you, because you said like when you got into the industry, you kind of picked a path, and but then as things have kind of come around over the last number of years, I've got to imagine that the day that you walked into the industry, things have changed a little bit, or maybe a lot of it. Is there been a technology? Has there been something that has accelerated the growth of financial planning?
Yes, and I'll just state that I think largely it has to do with technology.
Okay.
When I started, again, the firm I was with was all about financial planning, and I immediately gravitated to that path to work with clients.
Yeah.
That just suited me, and I liked the high relationship component. However, the financial planning was in its infancy, and technology was, relatively speaking, in its infancy. So it was still of benefit, but many people had kind of a one-size-fits-all financial plan that couldn't really be highly customized. It still was better than not having the conversation and the path creation.
Right.
But over time now, what we can do for our clients
Absolutely.
is just, it's very broad. We can be very specific. We can integrate different financial strategies to see the output. And I believe the quality of advice that we can now give is so much better. I won't say it's just because of technology, but technology does have a big role in all that.
Absolutely. I think, with technology, and that's a great segue, because I think you focus a lot on technology with some of the stuff and it's really helped me, but also like an e-money or something like that, where now, again, we don't hold the keys to the castle per se, where, the old, like I remember my parents had a financial plan. They had this guy do up a plan, and this was when I was in high school, and they brought it home, and it was in this big, thick, well-bounded book, whatever, and it was Jim and Jill's Financial Plan. And then it never got opened ever again. And it was like, well, cool, like what does that serve? Now with technology, now we can kind of knock that down and say like, because when my parents walk out of the door, that a lot of that information is irrelevant because markets change, those, life happens, and that stuff can, the details change.
Sure.
So point being is like with technology today, you can actually have this information continually uploaded, which creates that level of awareness, which is part of having a mindful plan. So in working with your clients, Kevne, how important is it for you to discuss people's passions, their purpose, their meaning in life, or I guess like whatever gets them going in their day-to-day and kind of their big picture?
Mm-hmm. I think it's vitally important to dig as deep as somebody wants, but also what you as the advisor need to uncover what's really driving them to even coming into the door.
Yeah.
Is it because they are fearful? Are they just excited and therefore kind of in that greedy category? But what is it? I've created a class and I teach it called Women, Wealth, and Purpose. And an important exercise I do around that purpose identification is to give all of my students an envelope with 30 plus images that might be a palm tree on the beach. It could be a boat, it could be knitting needles, it could be a woman reading to a child. And again, 30, 40 different images. And I ask them to envision that they have all the money and resources they possibly could need.
Mm-hmm.
Don't have to worry about money. What would they do with their time and energy? What tugs at their heart? So I ask them to cull through the pictures and pull out those that really speak to them and then prioritize them. Actually put them on a piece of paper so it's their vision board.
Right.
And through the rest of the course, we're talking about financial concepts and how to align decision making with those images, those thoughts, those goals and passions that are important for
Right.
them. That alignment
Right.
between resources and purpose.
So that idea of alignment with the mindfulness is like those things are right in line with each other because you have to make these aligned decisions to be in, to again want to achieve your ultimate goals. And if your ultimate goal is to provide for a grandchild or something like that, how do you create aligned decisions around that? And I think it all digs into this idea of why, and having that, or rather answering what such a simple question is. Well, one word question, why?
Mm-hmm.
And how do we develop that? So Marilyn, talk to me about your kind of interactions with your clients when you're uncovering their needs, uncovering their purpose and stuff like that. You've talked to me a lot about a number of areas, but I always notice that your clients just absolutely love you because you dig into some of the minutia, if you will, some of the touchy-feely stuff.
Well, I think oftentimes I tell people that if we're talking about money, we're talking about your life, because money touches everything about a person's life.
Yeah.
And so, and I open often my appointments with that if someone's coming to me for the first time. Because what I'm going to realize is that not only are we going to talk about their money, but their life will unfold in front of all of us. And
Right.
sometimes they don't even know what's coming. So I'm always surprised because we start off and we're talking, let's say, about retirement.
Yeah.
And then what you find is, no, my bigger fear is that I've got aging parents, that I won't be able to retire because I've got to take care of them.
Yeah.
Or in Kevne's world, I've got a special needs child or a special needs grandchild
Yeah.
that I know that I have to take care of. I
Right.
just had, someone walk in and say, I'm 65, I was coming to talk to you about retirement, and I just found out that I'm getting my 9-year-old twin girls from my daughter that I'll be raising.
Wow.
So there's always those kinds of stories that, and I go, you're right. I said, let's deal with the things that are of importance to you first,
Yep.
and then we can talk about what your money can do for you.
Yeah, and that's so important to have those discussions. And you reminded me of a term yesterday, and it's just kind of funny. It's your clients don't care how much you know until they know how much you care. And this idea of digging into these topics about family, about purpose, about their history, because at the end of the day, our money is this emotional, like highly emotional thing. We're all affected by money, whether you have a lot of it or you don't have any of it. Money is constantly around us, and I think sometimes we do a bad job of acknowledging that. Do you see that in your experience?
I don't know that we do a bad job. I think that sometimes it's, as an advisor though, what I have to come in is not coming in with my own judgment. So, and I think that's a real big part of mindfulness, is being able to absorb what they're telling me without me putting my values on what they're telling me.
I like that. I like that. So approaching it, so you're kind of, and I would say this to our listeners, as an advisor, this has been a big role in my young career. I've been in the business for 10 years, and it's still uncovering like what my direction is in the business that I'm creating. But being a guide, holding my clients' hands through thick and thin in a big way, and having these non-judgmental approaches, and saying, like, I've had clients come to me with this idea that they've got debt, they've got credit card debt. And they almost like they feel bad, like they take their statements and they throw them away before even looking at them, or they feel sheepish when they talk to me about it. And for me, it's like, look, let's get rid of that. Like, let's take that and let's get that behind us, and let's move forward with a new chapter. Do you find that with you, this idea of coming, that your clients really appreciate you coming to them with like lack of or no judgment, and then maybe getting beyond that? And how do they receive that?
Oh, absolutely. How many people come in and are just embarrassed with where they see themselves versus where they think they should be?
Yep.
And maybe they need to do some things that others don't have to do, but that's okay. This is their journey, their path.
Right.
Let's just identify where somebody is right now without judgment.
Right.
And just try to get them on the right path. And it is, as Marilyn said, sometimes hard, in my view, to keep from saying maybe you were spending too much at some point in your life. But the fact is that now it is time for a new page.
Yeah.
And let's push all the judging aside and embarrassment, and just be proactive in making progress. And that's just all good. There's nothing wrong with any of that.
So this might be the millennial talking, but there's this idea of safe spaces, and it's sort of a lame deal. It's kind of gotten beat up, but really, like, this idea of like our office is like a safe space for, like, and I've actually seen this within the context of a husband and wife, where I end up becoming this moderator between the conversations, because her vision of their financial future is different than his vision, and they're just not in alignment with each other. But there's also another idea that I guess that comes up when you were just talking, and this is idea, the shoulds. How much should I have saved for retirement? How much should I be saving? What is should I be taking on debt? Shoulda. And really, that doesn't make any sense, because what's good for you is not going to be good for you, which is not going to be good for me, and that's not going to be good for your clients. Like, the idea that your neighbor has financial strategy isn't going to be the strategy that's going to be best suited for you yourself. So how do you navigate this idea of shoulds versus like applying it to their financial life?
I think part of it is helping them release the shoulds, right?
Yeah.
So it's releasing what they have read. Charles Schwab said that at age 50 you should have X amount of dollars put away and should be ready for retirement. And a lot of people have heard, I need to have saved this many times my age. So we've got all these benchmarks out there that media has promoted, and so they come in with this. Well, I don't have that, so I must have failed. And you go, no, you haven't failed. You're here. The number one, you're here. That's the first step, and we can work it forward from here. And maybe their retirement isn't going to look like Charles Schwab's.
That's
in
true.
reality, it's not going to look like Donald Trump's.
Exactly. Yeah.
But it will look like theirs.
And Kevne, for anything to add to that?
No, not really. Just helping somebody identify a path where they can be successful. And it doesn't, as Marilyn said, have to look like anybody else's success story. and maybe they won't end up in a place that they thought they might, but
Yeah.
they still can end up in a place that's comfortable, secure, and satisfying and gratifying.
Right. Well, that brings up this great idea of intention. And I've seen this far too often, is people get to 60, 65, and they got there kind of by accident. And I'll use my parents as a perfect example. They didn't do a lot of financial planning, but by kind of some sheer will and determination, my mom was just a big saver, they got to be able to retire in their early 60s, and they're fortunately for them, retire relatively well, and they're having a great time in retirement, what have you. But I always say that they kind of got there by accident. And my mom will even come outright and say, look, we didn't do a lot of quote unquote planning. We just were savers, and we were pretty frugal and stuff like that. And so this idea of an intention and creating like a purposeful like path for yourself can be really powerful. And maybe you can share a little bit about your experience working with your clients, creating that intention, because I've also seen the other side of the coin, and that is they got there on accident, and that was not as successful as they would have liked. That they get to 60, 65, even 70, and they don't really have enough saved for retirement, and the numbers just don't align. So do you work with your younger clients to help them create alignment and intention within their financial plan?
And I think part of that, yes, but I think part of it comes from financial planning.
Okay.
Because what you start off and you help people create a budget. And I don't know about you, but budget is a 4-letter word to most people.
Oh my gosh, yeah.
And because they look at it almost like, keeping track of the calories they eat.
Right.
They say, are you going to put me on a financial diet? And I go, no, we just need to know where what you're spending.
Yeah.
Because I can't hit a target that I don't know what the target
Right.
is. So, but yes, I would say that sometimes it's just getting people to step 1.
Yeah.
And then they can get to step 2 and 3 and 4, and then they get excited.
So little bite sizes,
Yeah.
where you're like, man, you've got this massive vision out there that you're like, holy crap, how do I save $1 million? Or how do I save $2 million? How do I buy this house or that house? But like breaking it down to those incremental steps actually it makes it more digestible. I'm always reminded, and it's a comment a thing that I say a lot, is how do you eat an elephant? One bite at a time, right?
Sure.
All right, so I guess we kind of talked about this idea of bringing mindfulness to your clients. What are some of the tools that you use to identify and help your clients get to that level of mindfulness?
I think probably the first thing is, like I talked about originally, is having someone tell me their story.
Okay.
Because if they tell me their story, and the story could be rags to riches, it could be riches to rags, it could be confusion, it could be I came out of a bad marriage, and oh, by the way, so whatever the story is, that's where we're starting. And because that puts them in mindfulness, they're in the moment, they're experiencing it. Right. And they've got judgment, but I don't. So at that point, we can start to build a new story. So part of it is creating the vision of the new story. So where would you like to be? Just like with looking at the pictures. What do you see yourself doing? How do you, if I gave you $1 million, what would you do with it today? So it's helping them visualize. But you got to start back at the beginning.
With some pain. It sounds like that might be in a lot of cases, a painful conversation.
Can be.
You were talking yesterday that as we were kind of developing and talking about this, people's backstory and some of their experiences, and it sounds like money is this like a family an impact that happens at a very early age, and we don't know the exact numbers, but exact ages. But share your insight on how you incorporate mindfulness with your clients.
Well, I'll start off by saying that the discussion of money in our society is very much of a taboo subject, and I don't know many people that have told me that as they grew up, their families would openly discuss finances.
Yeah.
And I know my family did not. And so I believe that when people do get the gumption to come in and talk to a financial advisor, again, oftentimes it's with fear, embarrassment, shame. And so what I try to do right from the get-go is just to reinforce that this is a safe space.
Yeah.
We have to break down the barriers to be able to help that person get into a comfortable place, a more comfortable place in where they want to go. Without breaking down initial barriers, I think they're not going to start with that small step of, let's look at your situation today and be open to seeing what it might mean, what changes might need to take place in order to get you to where you want to go.
And I get some people that have gone online.
Yeah.
You know, they go to the robo-advisor.
Right.
Right? And they fill out all the paperwork and they'll walk in with it, right? So they think they have a plan.
Yeah.
And so when we start to really talk about what that plan is, what we realize is it really was a robot that helped them do this.
Oh my gosh.
There was no emotion to it.
Yep.
They didn't buy into it. All they did is fill out numbers, and the numbers are meaningless to them. So I would encourage people, because having a robo-advisor is a great start, but that probably isn't going to get you where you want to be.
That is so awesome, Marilyn. And both of your comments are really, like, again, bringing up all of these ideas of how I can apply this to my own business, number one, but also some of the challenges that we're seeing out there. And that is this idea that it's just so simple. Well, what I find is when people do walk in with oh, I've got a financial plan, and then you sit down and you start to break it down, it's just just as well as a back of the envelope financial plan, or what I call the cocktail napkin financial plan, where there's 4 or 5 numbers and you just plug it in and I'm going to be fine. And that creates this overconfidence, which I've actually had, to go back to the idea of greed. People walk into my office and it's usually the man, 9 times out of 10, cross his arms and say, I don't need this junk, like this stuff. And then we start to build it out and he goes, oh, well, Taylor, I didn't think about that angle, or oh, I did apply my mortgage at inflation levels, and so we can be a little bit more comfortable if we do this. And all of a sudden we start to actually unpack some of these numbers, and they recognize that, oh, there is some complexity, there's a lot of details that are involved in that. And that just really comes from uncovering some of the basic concepts of what we're doing. And for me, a part of my philosophy is this idea of financial vitality. And financial vitality is kind of taking into consideration some of those metrics. So if we think about vitality from our health and wellness, you got to stand on the scale. You've got to do the fat test. You got to take different measurements, and it really maybe a blood test, and that's where you start to see some of the basic metrics that are generally considered financial or wellness or health and wellness. But we can also apply some of those similar tactics to financial advice. So do you think that, maybe I'll balance it here, do you think that this mindfulness, the meaning, the purpose, that matters more than the hard numbers, matters less? Like, how do you think the mindfulness and the numbers match up, and what's more important?
I just think that the mindfulness gives a reason to achieve the numbers.
Okay.
So, and the numbers sometimes give them a goal to apply their mindfulness to. I mean, so sometimes they don't walk in with a goal. Sometimes they walk in with a number, right? They say, I'm supposed to have $5 million at this point in my life. And you go, well, what would that do for you?
Right.
And what did you want it to do for you? And what would that mean to your kids? And what would that mean to, the company that you work for? So sometimes we just need to take a step back and help them see that it's not just a number, that it's a purpose and a number.
So it's like saying, if I reach X, then I'm going to feel Y.
Right.
And what I've worked on with some of my clients that have that sort of, if I get to $1 million, or if I earn $200,000, or if I do whatever that number is, and it's usually a monetary value, if I have a Ferrari, or if I have a house in Cherry Hills, then I'll be happy, right? And what I've helped my clients do is to maybe shift that focus and create a little bit more of a purpose statement that says, you know what, like, then the practice or the exercise that I have is the 5 whys. So you start to say, well, why is that the case? Why do you feel like you need to make $500,000? Well, because of this. And then after the 5th why, then you start to really understand what's the depth and what's the meaning behind that desire, because our initial desires aren't always in alignment with what our deep-seated feelings are and meaning behind that.
Right. Getting to that why then will result in numbers. And you're either here with your numbers and only have to make minor changes,
Yeah.
or you are here with your numbers, and if this is that important to you, here are the significant events or changes that are going to have to occur.
Right. Or like somebody saying, like, I can't afford financial planning. And you're like, well, what can you afford? And they're like, well, I don't know. And so they just like immediately go to this emotional reaction, where in reality it's like, I don't think you can afford not to do some financial planning, and this number over here doesn't really have anything to do. I mean, it actually could save you hundreds of thousands of dollars in the long run. So anyway, it sounds like, I mean, we were talking again offline when we were preparing for this about some of the advantages of mindfulness generally, and I talked about that initially as this idea of mindfulness being like meditation, awareness, and it always is like focused on this like psychological or like mental health, right? But we found that through some of our research that mindfulness can actually be a huge benefit in the face of financial questions and your financial health. We were looking at this one review here, and it was talking about the benefits of mindfulness: greater awareness, less stress, boosting your working memory, increasing focus, less emotional ups and downs, more compassion, and then ultimately a better quality of life. So if those are some of the benefits of mindfulness in your day-to-day practice, I'm not sure that any one of those don't fit in the world of financial planning. Would that be correct?
That would be correct.
Absolutely.
So is there any last words that you have about mindfulness and some of the things that you do with your clients? I know, Marilyn, that you talk about like ethical wills and stuff like that, and that's not directly related to mindfulness, but it's also passing down more than just your valuables, right?
Right. So passing your values in addition to your valuables is what ethical wills are, and they go back to biblical times.
Yeah.
So, and part of that is helping people again develop their own story that says, this is what's important to me, so this is what I will pass on.
Love that.
So, that's one of the things we do here, and that's one of the things that I think adds value to presidential wealth management.
Yeah. Well, I think the work that I've seen and learned from you has been super powerful. Kevne, I guess I'll pass that over to you. What are some tools? I know that you do a class. You had mentioned it briefly. Can you dive into that a little bit more?
Yeah, so my class is, again, called Women, Wealth, and Purpose. And the class starts off with this discussion of what is important to you.
Yeah.
And I would say many of the students attend that first class not knowing that. They think that we're just going to start to talk about how to invest and so forth.
Day one, here's your budget. You're like, no. Let's go back on that a little bit.
That's not it.
I love it.
Because what follows is driven by what is important to you. And there is this there's this mainstream concept now called behavioral finance.
Yep.
And I think we're all aware of it, and maybe our listeners are too. But that actually is a concept of our behavior leading our decisions, our emotion-based behavior leading our decision. There's articles about that since the 1700s, but actually just since the 90s has it become mainstream for in the world of finance.
Yeah.
This behavioral finance. And the whole notion is that we as humans are innately emotional, and we tend to make decisions on a very quick called heuristics method, where we are not always interested or willing to be mindful, to go engage our cognitive thought process, to consider a situation that we're in carefully.
Yeah.
And I think this whole idea of mindfulness, with all the benefits that you just mentioned of what it provides, ties directly into what we know. We have to step back. We have to set the emotion aside, and we have to be focused on what is it that is important, and then have some, most likely, help, professional help, in then making the numbers work to make those goals become reality.
Yeah, that's awesome.
And one of the largest financial services, American Funds,
Yeah.
discovered this, probably 20, 30 years ago. And that's why they encouraged all of their, not to market directly, not to go directly to,
Oh, really? Okay.
to a retail client. Is they said, we want you working with an advisor, because an advisor is someone that you can go to that will help you take the emotion out of your decisions to buy or sell.
Right.
So that was one of the things that they discovered and have done for many, many years.
That's a great way to kind of wrap it up here. And I think at the end of the day, mindfulness is not isolated to meditation or a yoga class or this, just one-off kind of thing. Yeah, the Om approach. But it's about creating your new story. Marilyn, you talked about that, and I think that was a massive benefit to our listeners, is where you've been. What I always say, what got you here won't get you there. And this idea that we kind of need to shift our conscience a little bit and look at what we're doing in the face of financial planning, investment management, all of these things, and question it and say, what is the why behind, what is the purpose and meaning behind what we're doing? And Kevne, is there anything that you would like to end with before we wrap it up here today?
Just that hopefully our listeners now recognize it is a very important part to financial planning, this life plan, this soul searching. What is it that drives your heart and your spirit? How do you align your finances to those means?
And I think they're directly related with each other. And so for our listeners, we've got some great tools. Talking to these two advisors have been really beneficial, hopefully, to you today. We're talking about mindfulness and how it relates to your finances and what you can do in order to create purpose and meaning behind that. I certainly appreciate you taking the time today, and I hope you got some value out of mindfulness and wealth mindfulness.